Right, thank you, everybody. I am sure today when we talk about cryptocurrency or blockchain, it's not new for people here in this audience. But for the mass media, that is just something they're starting to kind of adapt and kind of start tapping into. And now, with the blockchain, something new arises that was mentioned earlier. NFT and metaverse. That is something that's getting everyone very excited, and big news are all popping everywhere. So today we have two great, amazing technologists in this area, two great, amazing speakers, Evan Auyang and Mr. Bill Tai. And I would like to kind of see how would they introduce themselves in context what they're doing. Like for me, I head up digital transformation and innovation at the Great Yugo Group, which is a very established but traditional real estate company. I title myself public enemy number one. So Evan, let's start with you. How would you describe yourself and see yourself, and what unconventional title would you give yourself in what you're doing?
Well, it's hard to consider myself a technologist right now because I just joined Animoca not long ago. My experience has been quite varied. If I were to give myself an unconventional title, I would think that I'm training myself to be a tri-sector athlete. So what is tri-sector? It's really someone who has influence and capabilities across the for-profit business sector, nonprofit, and government, right? So that's what I envision myself to be. My own experiences has been, I started with banking, and then I went to management consulting at McKinsey. I was the deputy managing director at Cali Motor Bus Company.
Wow.
So that's where I sort of learned about public space and all that. And then GLG, and then now at Animoca. So that's my mission.
Okay, amazing. So Bill, you're also another big powerhouse just like Evan, and you have started great companies and very leading and a great investor. How would you describe yourself, and what kind of unconventional title would you give yourself? Oh, hold on, you're on mute.
Yes, now I'm unmuted.
Yeah.
I would call myself the kite surfing VC because that's what I do. I was a sponsored athlete in kiteboarding, but I have surfed a lot of different waves. I started as a computer chip designer in Silicon Valley in the 80s. Became a venture capitalist in 91, so a good 30 years ago. I used to fund silicon companies, and then equipment companies, and then network companies, and then interface companies, and then data science and blockchain. And actually, it's been a long time since I've been to Hong Kong, but in 1998, I had founded a company in 94 that acquired AT&T Hong Kong. Wow. And it was called iAsiaWorks. Goldman, Morgan, and Solomon took it public in 2000. And I did retire for a bit, became a sponsored athlete in kiteboarding, so the kiteboarding moniker is real. In the crypto space, I did enter the Bitcoin sector in 2010, so a good 11 years ago. And I do happen also to be one of the main early angels in Dapper Labs that kind of created the NFT wave with CryptoKitties, and is now the creator of Flow Blockchain and NBA Top Shot and a bunch of other things.
Okay, great. So let's start with you, Evan. So right now, what do you see the difference between NFT and metaverse? And how do you see its exponential value when they are combined together to create a product or service or within a company? And how does it affect your investment strategy when that happens?
Well, what our mission is at Animoca is that we're trying to build an open metaverse, yeah. And it's done through blockchain, right, and an NFT. So if you look at the slide right here, this is what enables the metaverse and NFT. So we're talking about true digital ownership, meaning that whatever we create an NFT is immutable, it's unchangeable, it's permanent. You can trade it. There's interoperability across different metaverses, and that's quite different from what we've seen before. And on the next slide, if you look at sort of where we are, the next slide, if there is a next slide.
There is. It's coming up. Are you gonna show the second slide? Yeah.
There we go. So this is the, oh, there's something wrong with it. Anyway, there's supposed to be a big circle, which is then since moved on the left or right. for the audience, it's like on the right side, if you're looking facing me on the right side, it's what we have essentially invested into. So we have over 100 investments that we've made. Some are directly our companies that we operate. We see ourselves not as just a gaming company. We see ourselves as an infrastructure or an ecosystem facilitator. So the reason that we do actually blockchain gaming, play to earn, metaverse, infrastructure, et cetera, is because we see our investments as a way of capital, of helping how other companies grow. And therefore building the ecosystem up so that it can be sustained and be healthy. And on the left side, the other side, is sort of what we operate as portfolio companies, right? So to answer your question about NFT and metaverse, the NFT and true digital ownership actually enables the metaverse, right? So our aggressive investments and operations within it would then facilitate the development of the ecosystem.
Okay, cool. I mean, like I read an article actually Bill gave me. It was amazing. In one sentence, they actually described the relationship between cryptocurrency, NFT, and metaverse. Blockchain is the foundation. I add that, Bill, sorry. Blockchain is the foundation. And cryptocurrency is the currency you use to buy assets, which is NFT, that exist all in the metaverse world. Am I correct, Bill? And then from your perspective, how do you view what Evan has just shown, and with your experience of years of experience in the crypto world, how does that change your investment strategy? That's really important, number one. And number two, you mentioned something about microeconomies and the virtual nation. What does that have to do with the way you look at companies and where you buy or invest? Is it different, or is it the same, what Evan is talking about?
It is different, and I'd say, the main thing that has changed in my thinking is that I'm no longer just funding products and services. I am looking for companies that produce their own economies. And the more notable companies out there that you might think of are companies like Roblox. If you think about that, it's a platform for virtual worlds, and every kid can create their own server, and people can come visit that little server, which is its own little metaverse, its own little virtual world, and they have their own ability to create money. So a kind of currency, the Robux. There's a very vibrant economy. And if you think about brands in general, say a company like Starbucks, Starbucks has 20 million people that have Starbucks cards. They probably have a float of $2 billion. They are like a virtual nation. They could have their own Federal Reserve and print currency if they wanted to.
Okay, let's stick with what you're just saying. And then I know that you have been talking about low friction. I'm not sure if everybody heard that term before, and it'd be great if you elaborate a little bit on that. And what does it have to do with NFT, the value Bill? Because I believe you said that NFT builds low friction value that can sustain any bubble, right? Because it has a business model. And what does that mean? And how does it impact the way you look at company and the way you invest one versus the other?
Okay, so when I look at in the modern economy, in kind of the world of digital, when I invest in companies, I do happen also to be the first investor in Zoom Video that we're using, which is a very low friction way to use video, right? So if you think about successful investing in tech in the era that we're in now, it's not ending, but which we're going to be shifting to investing in economies. Tech does three things. It lowers the friction to a use case, and it makes it highly replicable and highly scalable. If you do those three things, you will always make money. Find an emergent behavior, make it low friction so everybody uses it, build it so it's replicable, scalable, get it to volume on marginally no cost. And so if you think about applying that to the world of purchasing and sales and trading of assets, let's take the old physical world of a very successful company, eBay.
Okay.
So if you think about how they lowered friction, before eBay, there were flea markets. So if you wanted to sell something, you would have to put it in the trunk of your car, drive to a place, put it in a football field, hope that somebody was walking in that football field in the area that you were at to find the thing that you might have on the table. And it was hard to find. So when eBay came along, you could take a picture of it, post it, describe it, and then people could search for it and they could find it with very low friction.
Right.
Now we're taking that a step further where everything, including the asset itself, is represented digitally. You don't even have to mail it. You don't have to send a check in an envelope to pay for it. Everything is done with literally one click. So all the friction's out of it. New sets of assets have been created. The marketplaces are a lot bigger, and they're a lot lower friction, easier
But
to use.
that concept is going to kill a lot of traditional business. I mean, for real estate, I'm started thinking how that's going to impact real estate, but that's another topic. So we're going to move on and talk to Evan, because let's put low friction, what Bill just described. And in terms of your company philosophy, I remember your executive group chairman, Mr. Yatsu, was talking about open system, which you mentioned earlier. But right now, open system versus closed system. Explain a little bit about that, and also explain what Facebook is doing. I know everybody is talking about it and is having fun or upset that Facebook is called Meta now. The world that they're building with 10,000 people in the next 5 years, is that a closed system versus what you're trying to build? I mean, like, how would that impact a low friction that Bill just mentioned and your investment strategy?
Yeah, I mean, we believe Facebook or Meta is actually heading towards a closed system, which it always has been. But to understand what's the difference between what we're trying to do at Animoca, which is building an open system versus a closed system, open versus closed metaverse. First, we will talk about what's data. How is it being facilitated today? Well, data is probably what's most valuable resource right now. We look at all the companies as of the highest value right now. It's all database companies. You can see that. Now, data is what it is today, as what oil was in the 20th century, right? Most of the 20th century. But if you look at how it's being manipulated, all of us create data, every one of us, right? On our cell phones, what we serve, and that data is mined and made sense by these platforms that we see. Right. Yeah? The platforms then make sense out of those data and turn it back to you and sell it back to you in the form of targeted advertising and goods and services, right? Now, you can say that that's okay because ultimately there's, in this Web 2.0 space where it's dominated by platforms, it's actually okay because there is some value added by directed advertising and targeted advertising. But there's some less excusable
Would you call
behavior.
it manipulation in that sense?
Well,
Like, we're being manipulated by big players, no?
Well, if you look at sort of target advertising, something that is supposedly for you, but if you look at some of the less agreeable things that we see, it would be steering of votes, steering of emotions, fake news, etc. Now, ultimately, if you understand one thing is, all of this is facilitated by some platforms that would have their own ethical sense of what it should be, what they should show, what they shouldn't show, is censored or not censored.
But that's why Facebook was in trouble earlier.
Correct. Now, going back to open metaverse, there are some major differences, okay, between what is open, what is closed. First is ownership of assets through NFT. What I just talked about, true ownership of digital assets is only made possible by the blockchain. So open is, basically you can own it, versus closed is within platform, okay? Second is composability, okay? Composability means that you can actually build around it, you can actually, build more of it. Roblox, you can also do it, but it's within platform, okay? Same with Meta's own way of imagining metaverse. Third is interoperability, right? So you can actually carry that physical item, that virtual item, that physical item, across different metaverses if you want, because it's truly yours.
So do you think that, and Bill, you can chime on this one too. Do you think a lot of metaverse companies going to work with each other? Like your world, you can cross over my world? Or do you need to buy a ticket?
Sorry, Akina, I need to sort of finish off the properties of that first, okay? The fourth one is what you call governance, okay? All right, so, in our way of thinking through it, it's about DAOs, right? Decentralized autonomous organizations versus what is overall centralized, right? So you have all these properties that are at least relevant to what is a closed versus what is a relevant, what is an open metaverse. And if you're asking whether or not the metaverses will actually work with each other, is a very pertinent question because ultimately, what are we building it for? Yeah. So if you look at our investments, again, back to the chart, the circle chart, why do we invest in all of these companies that might eventually fight with each other.
Right.
Because we don't think of it that way. We think of it as interoperable, right?
Right, okay.
We think of it as that ultimately, for all our investments, we'll actually not seek to control. All of those investments will end up being less than
that's why they're
50%.
open.
That's why it's open, right? We will actually end up with all across the portfolio, maybe 20, 30% of our ownership, and let the DAOs take care of the governance.
Okay, great. All right. So, I mean, Bill, you have 30 seconds to kind of, augment what Evan just said before we jump into the last question.
Well, I think he's right. I think, assets can be portable. There's usually some level of abstraction, a kind of an interchange layer. So think about, loyalty points cards. If you have a Starbucks card or a Target card or a Walmart card, those points or airline miles, you can sell those into US dollars at different exchange rates, right? So all of those assets in the end actually are portable. It's a question of how many layers of exchange you want to go through.
That's amazing. Okay, I like that. Okay, last question to you, Bill. You wrote an article recently on Medium saying that there is a big difference between ICO and NFT. How does that impact the way you look at your future investment or your current investment?
So as cryptocurrency started to take off, 5, 6, 7 years ago, they definitely hit that, fascination ramp with the public where, once Ethereum was out there and you could name your own coin and create an ICO in 13 lines of code, several thousand people did that. And there was such a speculative frenzy around all of that. We went obviously into and out of a bubble that, rose rapidly, popped, came down. The stronger things have survived and prospered, like Bitcoin back at all-time highs and Ethereum at all-time highs. The vast majority of those things, they haven't really recovered. There have been a handful, I don't know what, 10%, 15% have become something interesting because there was a promise made at the beginning that you could put some money up like you could on something like Kickstarter, in the hopes that the team that you were backing would deliver on some wonderful technology to provide utility for that little token so that there would be usage cases for it. And a lot of that stuff never came to be. So there was a bubble where I think there was a speculative frenzy. And if you think about the characteristics of pricing, the market capitalization of a token, a particular token, like a stock, the entire collection, the entire universe of that token was determined by the last marginal trade. Just like, you take a stock like, Intel or something. The last person that bought or sold a share determines that price. You take that price times how many shares are outstanding, you come up with the market cap. So you have all of these different holders whose price is subject to that last person that buys or sells.
Right.
So which is very different than an NFT. If you think about an NFT, because the value is very granular to something that you may, if you purchased it, you probably like some facet or feature of that unique one-of-a-kind item. There's a lot more stickiness. It's a little bit more like buying a house. You're in real estate. If somebody buys a house and the market falls, they don't sell.
Right.
So there's a little bit of a psychological floor. So I think this is a very different wave than what we went through in ICOs.
Okay, awesome. Okay, Evan, how do you feel about that? And does that affect the way you guys judge how a company should grow and then evolve? Because you invest in a lot of startups, and this is a relatively new field. And it's kind of like the Wild Wild West. You can be a cowboy about it. And then how do you run in your company and your investment in that kind of aspect?
Well, I mean, first of all, I do agree with Bill in how he looks at NFT because, I think Bill also wrote that it's basically hyper granular matching of supply and demand, right? So therefore, ultimately, the price discovery mechanism is actually significantly better than what you call fungible tokens through ICOs, right? But yeah, this is a new space. I mean, we're at, the Cyberport call us the newest unicorn, but we already raised in the last round 2 weeks ago, 2.2 billion, 65 million at 2.2 billion. We're raising again. Ultimately,
So
it is about.
invest in your company?
Yes, we're open for investment for the next round, and we're looking for folks that believe in the open metaverse. So investors that actually really focus more on the closed metaverses are the ones that we don't believe are as mission aligned. But we are there to obviously educate. We're there to learn from the various companies that we would invest into as well. And it's a nascent space, and we'll all, hopefully it belongs to the composers and the builders and not to platforms.
I think that's amazing. There's a chance I might be a billionaire then one day if I start to how to build things. But today, thank you so much for Cyberport for inviting us, and thank you, Bill, and also Evan, sharing your knowledge and enlightening us. I had a great time, and thank you, and hope you guys enjoy it too. Thank you so much.
Thank you very much. And before you guys take off, let's take a photo together. So everyone, please get ready. And yes, Bill too, showing off your best smiles. And let me just get some of the perfect. Everything's good. All right, we're in the perfect position. Looking good. All right, let's do one more. All right, thank you so much. Once again, big round of applause. Thank you. That was a really good session. I wish we had more time, but that was really great.